Seventh floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
on the show.
All
Yes,
righty,
we
guys.
are here.
Happy per day.
Happy,
Hyperliquid.
happy secular bull market.
Hyperliquid. Hyperliquid per.
Hyperliquid near.
What's going on with Near over the weekend? Oh my gosh.
Hyperliquid near Zcash,
Oh
the
my
trifecta, the three-headed
My gosh.
dragon.
Venice just chilling, holding up 17.7. I mean, this is just, we just continue to have to slam the good coins, ladies and gentlemen. Welcome back to the Rollup. You're watching the Rollup live from the Tokenization Tower, broadcasting live from the financial capital of the world. Today's May 26th, and we have a great show ahead. Before we do, introduce Rob's new studio. I'm gonna tell you about Plume, the Nest. Where we're broadcasting live from, the Nest is Plume's on-chain asset management and vault product. Shout out to Plume, putting us in the office, getting us set up. Rob, tell us about your new studio, man. I noticed something different.
Indeed. It turns out there's two financial capitals of the world. The beautiful, sunny, quite warm state of Florida and its lovely income tax laws has brought quite a bit of wealth to the Sunshine State. Obviously, we are quite fond of our northern headquarters at the 77th floor of the Empire State. But this is the new digs in Florida, just outside Miami. I'm on the west coast of Florida, so just a hop across the Everglades. And sunny South Florida, tons of billionaires, lots of capital to be allocated, and nowhere better. We're doing the snowbird thing. We've got the Empire State, and we've got South Florida as our dual headquarters.
Nice. Well, glad you're settled in, man. I'm sure it was a hell of a weekend. The Memorial Day weekend in New York was unreal.
Go Knicks.
I mean, it was just Knicks winning, great hockey games. Sweeping. Yeah. Great hockey games, great Knicks games. It was electric.
Yeah. Memorial Day here was cool, getting moved into the new spot. I did get a chance to play about 9 holes of golf,
Nice.
and I got bit by a Lone Star tick. So I picked up some antibiotics this morning. We're dealing with that.
What?
Got bit by a tick because I lost a ball in the woods.
How do you know it was a Lone Star tick?
Well-
What even is that?
Those are the ones that don't carry Lyme, which is good. It's favorable for the culture. How do I know that? Is because I've got a close partner of mine that is very accustomed to identifying ticks through
you
her
had a photo of it?
through her work. She pulled it off of my leg. She took a look at it. She said, "Yep, that's a Lone Star tick." She got it before it like fully burrowed into my quadricep. And
Wow.
it's got like a bullseye looking thing, which was not particularly reassuring. But
That's unreal.
the good thing is that we were able to identify the species. It's the less aggressive kind. And, we're keeping all of our arms and legs. It's good to see.
Beautiful. Well, we've got a great show today. Welcome back to the Tower, ladies and gentlemen. Happy Tuesday. We've got Markets and Weather Funds founder is joining the Tower after a massive raise. Alex Fine, Omnia of Kinetiq. I think their token launch is tomorrow. The largest liquid staking protocol on Hyperliquid. And then we've got Kaleo calling in, Crypto Kaleo, markets, and more. Guys, always bullish. So excited to hear what he has to say. Topics are always powered by Trezor, our go-to hardware wallet. Visit Trezor.io. Use code ROLLUP10 to get yourself a Trezor today. Let's keep it rolling, ladies and gentlemen, into the markets and weather. Before we do, let me tell you about our friends at Frax. Open, stable, borderless, building infrastructure for the future of digital money. For more information, start using the future of digital money today. Visit frax.finance. Rob, it is 78 degrees and it is partly cloudy, definitely sunny, definitely a vibe in New York. It was a kind of an ugly weekend. Yesterday was beautiful. Knicks won 4. The bars were absolutely losing their mind. I mean, it was kind of insane. Monday night, walking home at like 10:30, 11 p.m. The whole city was awake. So yeah, it's been a kind of a shitty weekend, but yesterday kind of, made up for it.
Man, it's been quite warm down here. It is hot. It's a beautiful day in Florida, but we got the AC blasting. So You might see some sweat stains building up. We're going to deal with those as they arrive. But it feels good. I do like it here, and it feels good to be in the new spot despite the warm weather. It's funny how the weather section tends to turn into sports. But I got to ask you, Andy, as now you are a New York local, Knicks going to the finals. Who are they going up against? Because the other series here is tied 2-2.
I think they're going to play the Spurs. I think the Spurs are going to win it. I hope they win it.
Who do you put on Wembanyama?
I don't know, but I would just love to see that Wemby versus the Knicks in the finals would be just so electric.
Yeah.
So electric.
Yep, I agree. That's who I'm rooting for in the West.
Yeah. Today's weather, as always, is powered by our friends at Relay. Visit relay.link for any of your cross-chain swap needs. Let's get into the markets, guys. It has been up, down, and sideways, but honestly, not a lot has changed into Bitcoin and the majors. Before we do, let me tell you about our tokenized equities partner, Denari. Quick shout out to them, building infrastructure for tokenized equities and bringing real-world stocks on-chain. Do more with your stocks. Visit denari.com. Quite a bit of red out there today, but I mean, NEAR is sitting at 2.68. Last time we had them on this ticker before we went on that month-long trip, I believe it was at 1.3.
Yeah.
So
that's right.
NEAR's flying.
NEAR's doubled.
Chainlink's chilling.
They got all the way up to about 2.9. Almost $3.
What, yesterday?
Yeah. So obviously, no live show yesterday. We posted our full podcast with Arthur Hayes and Ilya, the founder of NEAR. Tons of great clips. Totally recommend watching it. Arthur calls for a 20x. That's when NEAR was sitting at about $2. We also, I realized some things that were kind of just hiding out there in plain sight, but they add to, why Arthur is making this call. NEAR is fully diluted, which is incredible. Everyone who is trying to dump has already dumped. And then Ilya also talks about some of the tokenomics, how buybacks could ultimately make NEAR deflationary. They're looking at lowering the inflation rate, and they're buying back tokens. All of this combined leads to a very compelling value proposition for NEAR, the asset. And then obviously all of the product suite, confidential intents, NEAR AI, all of this is starting to hit at the same time, which is great. And so no live show yesterday. We didn't go over the markets. NEAR was up at 2.9. Hyperliquid was 63, 64. So obviously, even though hype is 62, NEAR is 260, 270. Things have come down a touch since yesterday, but these things are continuing to charge.
Yeah, it looks good. We'll see what happens. Bitcoin's so weak. I mean, we just need Bitcoin not to just totally fumble down to zero, and we're going to have some fun times ahead. Markets otherwise, obviously this oil kind of stuff happened this weekend where there was a bit of a slowdown in this war and oil tumbled down, equities new all-time highs across the board. So, people are still a bit upset about the performance of crypto, and I don't blame them because it has been very, very asset specific. And honestly, outside of Hyperliquid, Venice, NEAR, Zcash, a couple of these other, kind of newer AI tokens have been starting to perform. It's been, the signs of life have been bleak. So
Andy, I think we obviously we've got a lot of news to cover, but we've got 20 minutes or so until our first guest joins. I think it's worth mentioning some of these other coins that are starting to show signs of life. Obviously led by the likes of Hyperliquid, Venice, NEAR, Zcash. We have this contrarian privacy AI narrative brewing. And I think that is now starting to seep into broader sectors of the market. And so if I'm looking at other coins that I think could follow suit, you've heard me talking about Akash. Akash is up 80% in the last month. It's up 175% in the last 3 months. They're focused on decentralized compute. They're doing very, very well. We've had Greg on the show. He was at NearCon. We've had him on since then.
Akash looks insane.
Just a great guest, great product. They're making waves in the AI industry outside of crypto. And then, obviously the token is following suit. So I like Akash. I also, we have WorldCoin is out there catching a bid. That there was some chatter around WorldCoin over the weekend. I'm still kind of on the fence about WorldCoin, but obviously it's got AI overlap, given that Sam Altman is, very much affiliated with WorldCoin, OpenAI. There's tons of crossover there. The other one, last one that I want to mention, actually I guess there's two. IONET is a good idea venture portfolio company. So obviously,
What is that thing doing?
A disclosure there, but it's up 20%.
Wow.
It's starting to hit. It's starting to catch a bid. Obviously, these things are, they're standing on the shoulders of giants. When you think about Zcash and Near leading this privacy wave, these things are starting to flow into the rest of the crypto AI space.
IONET, dude. I mean,
crazy.
Nah.
It's crazy. So I'm not really calling
know.
that, but obviously you just look at what is going up. It's up doing 10% today. It's up 50% this month. So
the chart is not great when you zoom out.
Yeah, when you zoom out, you look at the year to date, it looks okay. A year plus, it looks a little bit bleak. Long way to go to get back up to that 50, 60 cents range. The last one to mention is Zama, who is our partner for this segment. We've been friends with Zama for quite a while. They're a great partner. They're obviously playing into this privacy narrative as well. And I think they're an extremely slept on team. They are part of the research lab that is ultimately driving the space forward at a very, very deep technical level. It does take some time. We've seen this in the past where it takes some time in order for that technical prowess to flow into the asset layer. But I believe in Zama. I think the team is great. I think the product is great. They have the right vision. And I think it's just a matter of time before that value that they're building technically ends up flowing into the asset.
Zama looks ready to break out. Yeah, definitely not financial advice. Zama does look ready to break out. It's at kind of like a really important level here since launch. If it breaks here, it's kind of in unknown territory, which is always bullish.
It's pretty much at that launch price, isn't it?
Yeah.
Yeah, right at about
3 cents.
3 cents or so.
3.5.
3.5 cents.
Yeah.
They had a very unique launch. Where they had confidential bids. People were able to place. You weren't really sure, who was bidding where. So it was a very unique form of price discovery, which people thought was good and bad. Drove a ton of interest, ton of opinions. But you're right. Now it does seem to be looking at price discovery once again if it breaches this 3.5 cent level.
Yep. I agree. I like it. Zcash looks kind of weak, but I'm not really worried about it. It'll chop around before it breaks out. It's got quite the job to do to break out to a 10-year all-time highs. Hyperliquid, great.
Anything I'm missing on that list? Kosh, WorldCoin, IONET, Zama.
People are talking about Grass, but I don't know. It's got a lot of still quite the high float, and then Aerodrome, I think.
Oh, Aerodrome, not with the privacy narrative, but the
Aerodrome and Sky,
tokenomics.
I think both have a chance to kind of outperform from here. At least just like hold up and do well.
And is this like the fundamentals thesis? Because obviously on one side we've got the AI privacy thesis, but Hyperliquid is driving this fundamentals thesis on sort of the other side, where good fundamentals, good business model, good revenue ultimately leads to an equity like token, Aerodrome, Sky. These things that have good fundamentals are kind of building on the back of Hyperliquid, whereas the others are building on privacy AI narratives.
Yeah, it's kind of like a return to fundamentals thesis, buybacks, good quality tokenomics, good net value flows. Those things are probably going to perform. And so I think or at least like have a chance to perform. So that's how I'm thinking about it.
I like it. I'm holding both Sky and Aerodrome. Aerodrome had a nice pop. I think I got a good entry there. Sky's tough, but when it gets going, it gets going.
I know.
And usually that's, one of the signals for what people like to call alt season, which is, it's typically just been like a sector-led, like a DeFi-led bull run, right? Which is kind of the alt seasons that we can point to in the past cycles. They've predominantly been DeFi-led. And Maker was one of the slower moving ones, but when it got going, you knew there was things ready to happen.
Yeah. All right, guys, let's get into the news. We've got a ton to talk about today. Before we do, let me tell you about Near, our AI premier partner, the blockchain designed for AI native applications and autonomous agents. Start developing today at near.org. Already, Circle's Jeremy Allaire says programmable money is the only starting layer. Let's play the video.
So Circle is a money issuer. Like we issue digital dollars, we issue digital euros. EURC is the largest digital euro stablecoin. We issue digital treasury products. We have the largest tokenized money market, basically. So we're a money issuer, and so if we can build networks that have wide utility and protocols for those monies that we issue that are super widely used and provide a great utility, you can permissionlessly plug in, et cetera, and we can grow that. The monetary base alone can be massive, right? So we can imagine that these kinds of digital dollars running on these networks, there'll be trillions of dollars of these as opposed to hundreds of billions of them now. And so that itself is significant, and the economics are very significant from that. So Circle is a money issuer. Like we issue digital dollars, we issue digital euros. EURC is the largest digital euro stablecoin. We issue digital treasury products. We have the largest tokenized money market, basically. So we're a money issuer, and so if we can build networks that have wide utility and protocols for those monies that we issue that are super widely used and provide a great utility, you can permissionlessly plug in, et cetera, and we can grow that. The monetary base alone
sounds like the
can be
thesis,
massive, right? So we can imagine that these kinds of digital dollars running on these networks, there'll be trillions of dollars of these as opposed to hundreds of billions of them now.
What we have here, and we can go ahead and pause this. When he talks about the monetary base growing, the idea here is that we are going to have a better understanding of the stablecoins out there. We'll have a better understanding of the leverage in the system, and we can more confidently measure the amount of liquidity in the system, and therefore we can grow our monetary base accordingly. Right now, banks are doing the job of credit creation, and this is sort of they loan out the money, they create the credit, and then it's kind of just out there. And so what I think Jeremy is saying here is that being a monetary issuer themselves, they're able to create credit. This is taking the place of regional banks, commercial banks, not the gigantic, G-SIBs, but, they are essentially the new regional banks. They're able to create credit, issue loans, put more liquidity into the system, and grow the monetary base. And this is what the Federal Reserve, this is what the Treasury, this is what effectively helps the economy, is when banks and monetary issuers like Circle and other regional banks out there are able to issue credit and grow the monetary base. This is ultimately putting money into the hands of the people that need it. They're going to be doing good things with it. And if you think about the traditional system and the analog to the digital dollars that Jeremy is describing, you have a mortgage company or a business loan. They make that loan. There's a person at the bank that underwrites that loan, and they're going to maintain communication, and they're going to do their due diligence to make sure that the bank gets repaid on that loan with interest via the creation of valuable services from that business loan or from that mortgage. This is ultimately what helps the monetary base grow. In the digital equivalent with stablecoins and digital monetary issuers like Circle, they're effectively doing the same thing, but instead of a business loan to a construction company or a loan for a house and a mortgage, these digital monetary issuers are issuing credit to digital companies or digital protocols. And this is what you hear Jeremy talking about, is if we can build protocols that are helpful to an on-chain economy, and you can issue credit or monetary instruments that help that on-chain economy and valuable protocols flourish, then you're going to grow the on-chain monetary base or the digital money base. This is effectively equivalent to growing the off-chain monetary base and helping the economy flow, because you're putting credit into the hands of people that need it. They're going to use that credit for creating new services and filling demand in the economy for a range of services. And so now we're starting to see a suite of on-chain protocols and on-chain services get built out. Those companies and services need credit, and they need credit on-chain in the form of digital dollars. And I think, you know, and then obviously you have the off-chain equivalent here in the analog, but to really sum up this point, it's part of the thesis that we've been talking about, that a digital dollar tends to stay digital. You know, this, you know, theory, this law of, you know, this Newton's third law or first law, whichever one it is, you know, object at rest stays at rest, object in motion stays at motion. Well, a dollar that stays on chain, or a dollar minted on chain, tends to stay on chain. A dollar created off chain tends to stay off chain. And so I think what we're seeing here is that as, you know, new protocols get built out, you know, they issue credit in the form of digital dollars. Those digital dollars tend to stay digital. They end up in on-chain protocols, and then that ultimately ends up in on-chain assets. And I think we're going to continue to see this flywheel take place as more and more valuable on-chain digital services get created, and digital credit gets extended to those services and those companies.
Speaking of digital credit, our boy Saylor, he bought $1.3 billion of long-dated bonds or convertible notes back rather than buying Bitcoin. Kind of an interesting tweet from his side. Let's keep it moving into Hyperliquid though, Rob. Soon, USDT will be enabled as borrowable for portfolio margin on testnet, and then will be enabled in mainnet on the next upgrade. This is kind of an interesting piece of news following the news of Coinbase, USDC, and Hyperliquid. Basically, traders can directly borrow stablecoins for their leverage positions, this being USDT. Obviously, right now, USDC is the main one. Higher capital efficiency, you know, advanced level portfolio. This is just basic leverage, but doing it with Tether, following this USDC Coinbase partnership that Hyperliquid did, strikes me as a little bit weird. Yeah, I'm not sure what to take out of this, but I know that Tether feels like they've missed the boat on Hyperliquid big time, and on other perp dexes. Lighter uses USDC, Variational uses USDC. Somehow Tether missed the boat on perp dexes quite a bit, and I'm not sure why. Yeah, it's weird.
So Tether had a stronghold in centralized exchanges. Remember, Tether's got, you know, some early affiliations with Bitfinex. Bitfinex was one of the largest exchanges back in 2017 and 2018, the largest, Eastern Hemisphere exchange before, you know, the likes of OKX, and even Binance grew to the size that it is now. Binance obviously is still, USDT is very prevalent on Binance, but I think part of the reason that we see this here is that we do have an alternative. You know, centralized exchanges has its infrastructure stack. USDT is part of that. In, you know, Hyperliquid's case and other decentralized perps exchanges, you have USDC as a primary asset. There's structural design choices to these stable coins, and I think there's regulatory rationale as to why you might prefer USDC to USDT, but Tether is starting to encroach on the regulatory moat of Circle, and so Circle might not even have a regulatory moat beyond Tether at this point. Ultimately, I agree that it is strange coming after Coinbase's partnership and Circle's partnership with Hyperliquid, but this kind of just goes to show that Hyperliquid is going to continue to do their own thing. Just because they have this partnership with Circle and Coinbase, they're not going to be easily swayed. I think they're going to leave all of their options open to users and ultimately try to supersum everything and give all of the possible options to the end users.
Yeah, and just trying to make the best experience in general. Actually, more Hyperliquid stuff coming up. HIP4 prediction market said there was a Polymarket guy who said that this way of doing prediction markets and solving outcomes was absolutely redacted. We're going to get into that. Before we do, let me tell you about Infinify. Infinify is building DeFi infrastructure for simpler access to on-chain yield, liquidity, and capital allocation. To explore more efficient on-chain finance, visit infinify.xyz. So yeah, Rob, you sent this one in. I saw you were scrolling the feed. HIP4 update. This one's big. Hyperliquid just removed the need for external oracles on prediction markets. The validator set itself is now the oracle. The same 24 validators that sign blocks, secure 3 billion, and vote bridge withdrawals now deploy and settle prediction markets natively.
Yeah.
No Chainlink, no Pyth, no UMA, no third party, closed circuit. And yeah, there was a Polymarket guy in the comments calling this really, really stupid and arguing about validator incentives, neutrality, governance, and just kind of like what this means for Hyperliquid's set of prediction markets. So again, Rob, as you just said, Hyperliquid will continue to subsume as much as they can. They will just continue to build this platform that is, centered around their validator set, their needs, what they want to do, how they want to do it. And I mean, you got to think if you're like a Chainlink, a Pyth, a Redstone, or UMA, whatever it is, you wanted to be in this position, but unfortunately, they're just not going to allow that because they want to have full control of the outcomes.
Well, that last sentence is extremely important. And, they want to have full control of the outcomes. It's not too dissimilar from Kalshi's model. Kalshi has market makers, but they're trading they're deciding the outcomes of most of these markets. We're big Hyperliquid bulls here. You and I both.
It's no surprise.
But I'm going to have to go with the Polymarket guy on this one. I think this is a design choice that could come back and bite them, but with a caveat. Given that HIP4 is still very new, I'd imagine, and forgive me, but I don't know all of the details about what markets are listed, how permissionless it is. If the markets that are listed are rather like handicapped right now and they're not able to really just go and list every market under the sun, then I think this design choice is okay. Because if you read in here, there's like a news feed. Hyperliquid just made real world event resolution a native chain function. There's this like automated feed that validators are running that is giving them the answers to these prediction market questions. That works for a large set of prediction markets, price like certain price prediction markets, sports outcomes, the Fed rate hikes and cuts. That works for all of that. But as soon as you get into one of these markets where it's a little bit questionable in terms of the outcome, that is when you could see validators become misincentivized to ultimately arrive at a conclusion that is very objective. And that's where you want to start to have some separation of validator and trader, if you will, because you could start to see some conflict of interest when you have validators that are a little bit too close to the resolution of these markets. This is why Polymarket uses UMA. They got so much flack for it, but ultimately these things are distinct. And the reason being is that you keep the execution engine separate from the one who ultimately decides the outcomes. Otherwise, you could claim that, Polymarket is trading against its users. Kalshi obviously catches some flack for this, but they don't have as much generality in the markets that they list. And so while Hyperliquid is scaling HIP4, I think this design choice makes sense. I think once they start to get into more esoteric markets, they will need to rethink this design choice because these prediction markets can get extremely nuanced. And I think at that point, it makes sense to become a little bit less verticalized and actually have a specialized Oracle service that can help resolve these markets, because Hyperliquid's validator set is extremely good at doing what it does right now. And I don't think it makes sense to overwhelm the validator set and create something that's extremely nuanced and esoteric I think it is better to outsource that, despite this grand vision of supersuming a lot of finance, verticalizing a lot. I think it still makes sense to bring in third-party players that can be extremely specialized when there's a nuanced system that needs to be built.
Yeah, I mean, it's still very early days for HIP4 in general, right? For Hyperliquid's prediction market set. And they're going to have, they're going to go through the same trials and tribulations that a lot of these prediction markets have already. But they have enough capital, they have enough validators, they have enough kind of backing that this is, that they're going to figure it out on their own. And, I partially agree with your take, but I also think that, maybe we'll see a changing of the guard. I don't think Hyperliquid's prediction markets are going to get as big as CalShare Polymarket anytime soon. But if they do, then I feel like they'll probably face some more scrutiny and flack. So, yeah. Rob, we've got our stabled up guest in the building. We're going to take a quick standby break, get him set up, and we'll be back. Any closing thoughts before we get Kinetiq and Kaleo on?
Feels good to be back. Had a great Memorial Day weekend. Go Knicks. Go Hyperliquid. Go Near. Go Sky. Go Akash. Privacy, AI narrative, all over the place. It's great to see. Have a great stabled up segment. I will be here ready for you when you guys are all finished up, and we'll keep this show rolling.
All right. We'll be right back, Rob.
Money, power, and money, power, and
we get deep, you know we get deep, you know we get deep, we get deep, you know we get deep, we get deep, we get deep, we get deep, you know we get deep.
Attend the Davos of Web3.
See you next year!
2nd and 3rd of June at the Louvre Palace in Paris.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Ladies and gentlemen, we are back live here from the Empire State Building. I'm joined by Alex Fine, the founder of Fun, 26-year-old founder, a high conversion payments infrastructure company, and on-chain rails for global fintech. Quite the background. Also a fellow college dropout. I dropped out of University of Florida. Alex from Stanford, quant, AI, comp sci, a lot going on. Alex, welcome to the tower, man. Good to have you.
Thank you for having me. I appreciate it.
Welcome.
Excited to be here.
Beautiful day in New York.
Gorgeous day. Gorgeous day
Not
in
a
New
bad
York.
view. Good vibes.
Fantastic vibes.
Congrats on the recent raise. I know you guys put a lot of energy and effort into that one. I feel like it was proper timing given the maturation of the industry, the realization that payments, stablecoins, tokenized assets, amidst this kind of broad Web 2.5 fintech era is very much in the limelight and very, very clear use case of what we're doing. So bravo on that.
I appreciate it. I mean, it's pretty exciting because we started the company saying, hey, we're really big believers in fintechs going on chain. And if you go back 4 years, 5 years in crypto, like that wasn't a thing. And now it's really starting to manifest. Like those kind of like Web 2, Web 3 companies like ours are starting to hit a stride. So it's exciting. And we're at the very beginning.
Yeah, no, I mean, most definitely. I actually was speaking to a guy on JP Morgan's innovation team like last week here, and he came in and he basically said that he agrees and that they agree that stablecoins will be the primary form of payments. We're on our Stabled Up show, episode number 35. Shout out to our friends at Frax. We've got Alex Fine. Alex, let's just start with an understanding of the mission of Fun and just kind of understanding what it is that you are setting out to achieve with Fun. What is the main problem space that you're looking to attack?
Yeah, so I'll differentiate kind of Fun and how we work from traditional payments companies. There are a lot of payments companies out there, a lot of crypto payments companies out there. And the way most of those companies work is they say, hey, we are going to build a rail. We're going to convert euros into USDC. We're going to convert USDT over here to USDC over there. And we said, hey, that's kind of valuable to a certain extent, but ultimately the applications that are really building the future of finance, they don't care about moving asset A to asset B. Ultimately, what they care is getting as many dollars into the platform as possible. So what we do at our core, we're the highest converting way to get money onto a blockchain. Like that is our primitive. Nobody, if you A/B test our flow against any other flow, nobody is better at getting money onto a blockchain. And then that manifests, that primitive can apply to all sorts of different verticals. So it will apply to your classic fintech apps building on chain, your like Polymarkets and Lighters. It can apply to global commerce applications. It can apply to traditional fintechs looking to take in crypto. There are kind of like all these applications where blockchains create utility, and ultimately we're the best way to get money onto a blockchain. Like that is what we do at our core.
Yeah. And when you think about like getting money onto blockchains, right? People think about like on ramps, off ramps, often just exchanges as well. And like there is certainly a focus on like getting a US dollar or a euro onto the blockchain into like a stablecoin format, right? And so that's kind of like the entry point. It used to not be that way. It used to be kind of like you would buy on like, way back, you would buy on exchange, you'd buy your Bitcoin or whatever, and then you use that to trade pairs. Now all the trading on centralized exchanges is mostly USDT or USDC denominated, and then on chain is kind of a mix of like ETH, Sol, etc. When it comes to actually getting people's money from fiat into stable coins. Why would I use fund? What is so great about fund compared to an exchange or a different platform? What makes you guys unique in that respect?
Yeah, well, I'll answer the question kind of in two parts. One, we can do a little bit of an overview on, hey, how do we get to where we are in terms of stable coin payments and deposits, and then more directly answer your question. So I think there were really 3 eras for how we moved money on chain. We had era 1, which is your centralized exchange era. Like Coinbase started as a Bitcoin on-ramp, and people would go to Coinbase, go to Binance, they'd buy their crypto, and then they would move it into their wallet, right? That was phase 1. Then we went to phase 2, which is kind of this like intermediary on-ramp style world. Think of those like iframes that you typically see. Imagine you go into your favorite wallet, you see a list of different providers who each have their own iframe to onboard funds. And a solution like that like feels a little bit more native, but they have a lot of different friction points built in. Now we're moving to this 3rd era. And this 3rd era is really purpose built for, we call them the fintechs on chain. And what that means is they're finance apps, just like any other finance apps. They just decided to pick a better backend, which is blockchains, to build their finance app on top of. And for those types of applications, they're able to access a payment workflow that is at parity with almost like where we started 10 years ago in terms of the payment experience, the conversion rates, the KYC streamlining, the risk threshold, like all the components that go into high conversion deposits. We're able to get back to kind of where we were originally with centralized exchange level experience for decentralized and on-chain kind of applications. So I could talk more about what that looks like in practice, but those are kind of like the phases that we've seen the market going through.
Yeah. No, I mean, I agree. I remember going on Coinbase in 2017 and just putting in my debit card. That was the only KYC that was needed.
You should have KYC to ensure that you are compliant, to ensure you are compliant with all rules and regulation. But most of the KYC that you experience when you're going through on-ramps, that is not to do with compliance. That is to do with, in our opinion, poorly built, but risk models at the end of the day. And it's bad risk, and we think there are better ways to manage those kind of things.
Interesting. And how much of the volume that you're seeing is directly, fiat currency or, dollars, euros, et cetera, directly just to stable coins? Like, is that the primary flow?
To stable coins, over 99%.
Really?
Yeah, it's very high.
That's just like the easiest way to do it.
Yeah.
Is just take your dollars, get stable coins, and then use them to do whatever you want with them.
At our core, we users shouldn't know we exist, right? So you would ask, like, how would I use Fun?
Yeah.
You would go on, something like Lighter or something like Polymarket. You would deposit, and you shouldn't actually even really know that we exist. You shouldn't have to know that we exist.
Yeah.
You should just be on that platform, depositing on that platform. And many of those platforms take stable coins, and that's how most users prefer to transact.
And then do you make money on that?
We'll make a small amount of money. So our model is very much kind of like a Costco model. Okay. We realize that if all these companies are fragmented and they each have to build their own payment stack, they're each paying a certain amount for that. But because we can bring it all together and we can have one unified flow, we can then compress all of our downstream vendors. And so what that means is that we can offer the best market rate. We can offer rates that you can't get anywhere else. And then we are able to take margin from the kind of Costco model of massive scale. And that really is our business model.
And who's providing that liquidity on the weekends and, on Memorial Day, I'm trying to buy Hyperliquid, trying to go on Lighter and go long. Who's providing that liquidity?
Yeah, so I'll kind of answer the meta question. What is the delta between the liquidity requirements, the routing requirements for deposit flow versus kind of what you traditionally see in Web3? And there's a meaningful kind of delta, and this is where a lot of our value lives, between, call it like a 2.9 SLA and like a 6.9 SLA. If you are going through a deposit flow, it always needs to work. If you're going to deposit $1 million, $10 million, I think our largest deposit is like $40 million, you just always need to clear. You can't do a $40 million deposit and then you're like, oops, it didn't work.
Yeah.
Like, you can't ever have that. Whereas if you think about going to Uniswap, sometimes it might work if you want to do $40 million, but sometimes it might not work if you want to do $40 million. And that kind of isn't an option. And so that goes back to your question, what does that look like on the back end? Where do those liquidity sources come from? And we'll bring together a number of different providers to ensure that we can hit those high level SLAs. So this is everything from your public providers that we might get special rates on. We'll work with private providers that might not be publicly available. And then we'll build our own rate or our own route, as fallback mechanisms to ensure that all deposits, all transactions are always fulfilled. So it's a whole stack is kind of the answer to your question.
Yeah. And okay, so let's kind of look at this holistically. There's some sort of demand to come on chain. People with dollars typically probably aligned with a bullish market or just wanting to try a new product or whatever it is. I come in with my dollars. I want to get them into stable coins onto an application on chain. I go on these applications. They have a deposit function. I'm able to click that deposit function. It runs through fund on the back end, and then I get stable coins at the end. Great rate. I pay a little fee. Fund makes money. Kind of at an economy of scale type of mindset. I don't really even know that I use fund, and you guys just consistently exist at 99.9999% of deliverable effectiveness, and that's your business.
Essentially. Yeah. So like when you click on the deposit flow, we will power that deposit flow, everything from the front end. So we run a bunch of intelligence where you are going to deposit very differently than myself, most likely.
Sure.
Actually, we're both in New York. We're both in crypto. So maybe we're actually pretty similar. But we're going to deposit pretty differently than, say, a market maker in Dubai, than a retail user in India, than someone in South Korea, than a mid-market person in Europe. And the way a lot of these teams have solved this in the past is, if you imagine you look like the big iGaming sites. Look like a stake.com. Stake.com's great. But these sites, they'll have 40 different payment methods on the screen.
Yeah.
That is not a very high converting flow. At the end of the day, we're each probably going to use one or two assets. We probably have a bunch of USDC on Base or a bunch of USDC on Arbitrum, something like that. And the likelihood that we use, SEPA to do our deposit is probably pretty low. And so you want flows at the very front. It's really smart. That kind of knows the one or two payment methods a user is most likely to use. Like, for example, if you've KYC'd and saved a card with us, you're going to be 19 times more likely to use that card than just a random user coming to the site. That should probably affect how you change the deposit flow. Mm-hmm. When most of these sites, that won't change it at all, right? So we have the full front end, and then we do everything back to the back end routing.
Yeah. Okay, so then let's kind of get to the broader, bigger idea here, which is Stripe is going all in on stablecoin payments with Tempo. Shopify is adding or has already added USDC payment flows. We've heard the likes of Amazon and some of these others either doing it in their own native, coin or token, or doing it with stablecoins. And now we're seeing also the rise of crypto-linked cards. Mm-hmm. And so in the broader landscape of stablecoin adoption from some of the largest e-commerce providers, is there a strategy for fun? Do you guys have an in here? How do you guys capitalize on the broader kind of the broader trend that's happening, which is very much a lot of these e-commerce businesses are trying to adopt stablecoins? How does fun get in there and kind of make it a part of your business?
Yeah, it's a good question. So without naming specifics, we are working with, we're in the process of co-designing a solution with a very large commerce site. Okay. Now, our philosophy is not to be speculative in how we build. So we won't go and build a bunch of stuff for commerce and then see how it lands. We co-design work with really big customers. Now, a lot of our work so far, we've been really focused on is the fintechs on chain. And I think this market is actually going to be multitudes, orders of magnitudes larger than what we're going to see on commerce. Stablecoins are big, right? Stablecoins, hundreds of billions of stablecoins. I think stablecoins are going to grow 10x, 100x. But we think real assets on chain, if you just think about your own money, what percent of your money is in cash, right? What percent of it is in stablecoins? Probably single digit percentages, if that. We think that relative proportionality is going to be the same proportionality between stablecoins and all other assets and all other value, where that market is going to be 10 times, 20 times larger, and thus is going to grow 10x, 200x from where we are today. And so that's a lot of what we're focused on. It's those fintech applications leveraging blockchains in the back end.
Okay, so big fintech, big e-commerce company comes to fund. I want to design a stablecoin payments flow. Is that kind of like the demand question? And then the value or the supply is just kind of like, all right, let's build something that allows your customers, if they want to pay in stablecoins, to pay in stablecoins or receive payouts in stablecoins. Like, what is like e-commerce is kind of a two-sided transaction, right? There's a merchant and a customer, and then there's refunds, there's chargebacks, there's payouts, there's all sorts of kind of like functions of the business. Can you just kind of, without talking about who it is or what the company is or the specs of the deal, what does that actually mean for funds involvement in something like that?
Yeah, so what we'll commonly see is we'll see a merchant that will say, hey, we're trying to go into these certain markets, and we're trying to figure out how to get as much money from those markets as possible, and blockchains are a good conduit to doing so. And so what does kind of like the Web 2 alternative look like here? You would go look like an Uber or even like a DraftKings. DraftKings is just in the US. They have 100 people on their payments and onboarding team. Uber has hundreds of people on their global payments team. And so for them, that's kind of the choice. They're saying, hey, maybe we're a fintech or a service provider in Argentina or Chile, and we're trying to go to the rest of South America. Or maybe they think, hey, we have PMF in broader global regions. And now there's a little bit of a fork in the road. So they can either build out a full payments team themselves. They can go to all those regions, understand the highest converting payment methods, go through any licensing requirements or relationship requirements to set those up. Or they can work with a vendor like ours, where all we do is kind of optimizing those payment flows.
Got it. And this is not just in the US, I assume.
Most of our business is international.
Really?
Yeah, over 95%.
Wow. So we're talking like non-USD stablecoins then.
Oh, well, it's still USD
stablecoins.
Yeah, it's still USD stablecoins, but it's users outside the US.
Right.
Yeah. I mean, I think in the US, like our rails work pretty good. Robinhood app is fantastic. I like Robinhood. It's not that hard for me to get dollars. Not that hard for me to buy Apple stock. But those challenges are very, very real outside of the United States. Like fintech applications outside of the United States are very often scams. And this is something we've seen where when we work in high trust environments, teams just care about the deposit flow. When we go to regions where fintech applications are sketchy, we see teams really start to care about the withdrawal flow as well. So can you deposit and can you withdraw immediately and then deposit again? So it's like those sets of requirements are very, very different.
Yeah.
But it's all outside the United States.
And it's mostly USD, stable coins like the big ones.
People around the world want Western assets, want dollars, want US equities.
Yeah. Yeah. Interesting. What do you think is the part of your business that's going to grow the most following this raise? You have a ton of capital to basically grow and scale. What are you going to use this capital for? What part of the business are you really trying to, kind of bootstrap it and accelerate?
Yeah, it's a good question. This kind of gets to my philosophies on building companies.
Yeah, that's where we're going.
That's where we're going. I think most people, you ask most founders, like a lot of VCs would ask me, they'd be like, oh, what are your moats? What are your like competitive advantages? And we have very real competitive advantages at scale. When you look at startups in general, I don't believe startups have true competitive advantages when they're early on. Like anything 5 people in a room, 10 people, 20 people in a room can do in a year, someone else can put 20 people in a room and do it in a year, And so the reason I said is I think our only real competitive advantage when we are an early stage company is people. It is having the best people who are smarter, who grind harder, who have more just craft and love and care for the work that they do. And like, that is how we win. And so you're asked like, oh, we raise money. What are we going to use? How are we going to use it? It's all people. It is finding the very, very, very best people. And I think that's even more true in an AI driven world. And so our team currently is super stacked. Like our team is really, really strong, but it's just how do we take that quality and how do we extend it even further? How do we have like an OpenAI Anthropic level talent density in the this modern fintech space, which I think we totally can have. Like this is the coolest work you can be doing. If you don't like AI or like AI isn't for you, there's nowhere else where you're solving sicker problems than in our industry.
Yeah. And being 26 and, not having a college degree and kind of, having like a young feel, and how is it like hiring folks 5, 10, 20 years older than yourself, managing a team? How do you garner the respect of your team and kind of build a culture of shipping?
It's a good question. I obviously look young. I have youthful mannerisms, but I think often when I meet with execs and spend time with execs who have real pattern recognition for what best practices look like, that's when we kind of build comfort. And I actually haven't had a respect issue. I mean, most of our team is all older. I think I'm one of the youngest people at our team. We're mid 30s by head count. A lot of folks, we're moving a lot of money. So a lot of folks have real pattern recognition for how to, we create technology to help move money, and they have pattern recognition for how to do that well. So they're often much, much older, and it's important. Security, things like that are top of mind for us. But it honestly, maybe I'm fortunate, maybe I'm blind to it, but it hasn't been an issue.
Yeah. I'm curious what your decision-making framework is, right? Like I asked, like how are you going to, use this capital, right? Or who are you hiring, or what market are you going to kind of attack next? When it comes to Alex's decision-making framework, what does that look like on a, decision-making basis from the CEO kind of perspective? What are you thinking about as far as, there's very basic like risk and reward, or like positive and negative, or like pros and cons. How do you make decisions that are important to the company's trajectory?
Yeah. Why don't we go back to the customer and how we add value to the customer, and then that derives out the framework for which I make decisions. So how do we add value to the customer? We're the highest converting way to get money into the application. When you are at scale and you are moving hundreds of millions of dollars a month, billions of dollars a month in volume, every percentage point matters. Like the craft is critical. And so it's like, okay, everything for us is about product quality. Everything is about quality. Everything is about craftsmanship. Like if we are the best way to move money on chain, it is in everyone's economic best interest to work with us. So now how we work comes out from that, where there are a lot of companies who are very loud. Now it's ironic I'm on a podcast right now, but there are a lot of companies who are loud. They do a lot of marketing. They, all of that. That's not how we work. In fact, we've been so quiet for so long because all that matters is quality. So now you're like, okay, what is my decision-making framework? Think about team and culture. Everything is about craft. Everything is about quality. If I'm in an interview and I ask someone, what is their perfect day? I don't want someone who's going to tell me they're like researching all kinds of new technologies and are like, up to date on this and that. That's great. That's awesome. That's a great value. That's not our value. I would rather have someone say, hey, I want to spend all day making a button fucking perfect and beautiful and amazing. and that to me is awesome. Like those are the people we want. And so like those values of like how we deliver value to the customer, that, the rest of what we do derives from that, from the people we hire to the way we work internally, to the types of financial backers we want, to the types of customers we partner with. Everything is about quality and craft.
And so are you a perfectionist then? Would you call yourself a perfectionist?
Yeah, probably.
Yeah. Yeah.
I'm quite particular.
That doesn't slow you down throughout the,
No, it totally slows us down. Yeah, no, absolutely. There are many times where like I will see materials and they have if you're gonna ship something externally, even if you ship something internally, the quality bar needs to be ultra high. And so, yeah, there have definitely been times where I've gotten materials and I said, this is not going to go out, just period, full stop. And like a meeting needs to get moved, a launch needs to get pushed. But that's just not something we are ever going to compromise on, because I think that is at the very core of why we exist as a company. It's like we exist to serve these people. We exist to be the best. We don't exist to just like put stuff out there. So yeah, it totally slows us down.
Yes, some of the founders that I've spoken to often talk about micromanaging their team as slowing down their work, but like, it's just something that if you work at that company, you have to deal with. How do you go from like micromanaging and perfectionism to letting your best people do their best work without and like having trust, right? And like being able to trust your team to do a good job. How do you balance like your desire for optimal results and perfection, because you care probably some of the most of anyone on the team, versus letting people do their thing, letting people breathe, have space? How do you balance those two?
Yeah, it's a really good question. So the way I view my role, I have deliverables, and those deliverables I make very clear to essentially our exec team. And then once we have an exec and those deliverables are clear, my entire job, everything I work towards, is making that person successful. So whether it is resource allocation, whether it's how they want to run their teams, whether it's things I should be communicating to the team at large, like I work for them in making them successful. And so I actually give extremely high amounts of latitude and flexibility to the exec team because I find most really, really skilled execs, they have a vision, right? And if you're going to say, hey, you can do 70% of your vision, but it's got to be 30% of my vision for how we execute, that's going to fuck up the whole thing. Like it needs to be 100% their vision, and you need to do everything you can to make it like 110% their vision, to make their vision awesome and massively execute on their vision, right? On how to execute. And as long as the deliverables are clear, like, hey, you know, and I think saying, oh, hey, we're not going to ship like subpar things. It's like, no, it's not even, we're not going to ship good things. We're going to ship excellent things. Good is going to come, and we're going to say we're not okay with good. And then great's going to come, we're saying we're not okay with great. And then we're going to say it needs to be excellent. As long as those expectations are set, right? Then my job is just helping my team perform, and I work for them.
Yeah. So I spoke to the CEO or the co-CEO of Kraken, Arjun Sethi, about AI at Kraken. Following Coinbase's set of layoffs due to AI highlighted, circumstances. And, he spoke about that internally they had this initiative that the employees need to be showing proficiency development in using AI over a period of time. And if not, that then they kind of have like this, like the way out of the company process that is like they make it very easy for people to leave. And he's built this thousands and thousands of people in their company. When it comes to using AI internally for yourself as well as for your team, how do you think about using these tools, and how do you think about your team becoming more proficient at using them time over time again, so that way your biggest competitors, which are doing the same thing, you're not kind of falling behind? How do you leverage AI and the ability to do things with it and encourage your team to use it?
It's a really good question, and it's something that I think about a lot, in that I'm a very, very big believer that AI is going to massively transform how teams organize and how teams execute. But there's an asterisk to that, where we live in the world of 6 nines. Sure. We live in the world of perfection. Mm-hmm. And AI is very good at velocity, right? But you can have instances where AI will miss certain things, right? It'll miss certain contexts, and it could take a 6-9 to a 4-9. And for us, that's really detrimental. And so we're very focused on using AI, but we intentionally don't measure like how many PRs are you submitting? How many lines of code are you submitting? Those are not the measurements of success that we're orienting towards. But it's still, how do you use AI in an environment where perfection needs to be just so core to what we do?
Yeah. No, I agree. I mean, we have all the team plans, all the things that you can need. It's used daily across a variety of things, from ideation to execution. But yeah, we're still at a point where it's like, there's a lot of corrections that still need to come. Kind of last thing on the personal side, then we'll hop back to the business. How do you differentiate your self-worth and your kind of self-esteem from the success of your business, your portfolio, whatever it is, right? Like, it's quite ups and downs. You just raised this round, everything's great, coming out of stealth. Next month, your competitor signs the next biggest deal, then you win the next one, then Bitcoin's up, then Bitcoin's down, then your girlfriend dumps you, then you get a new girlfriend. Like, it's just never ending, you know what I mean? Family troubles, etc. How do you kind of separate these external events from shaking the internal of Alex?
Well, let's start with what external events matter. The company. That is the external event that matters to me. I'm not too worried about market prices, not worried about my social life. It is the company. Yeah. Now, how do you separate to stay steady? I don't. I reject the premise. You just full send. You just go on the roller coaster. I completely, 100% tie my own personal identity to that of the company. Yeah. And so when things are going hard, there's a period of like a year where like multiple nights a week, I couldn't sleep through the night. You're waking up at 3 a.m. You're in the office at like 4. And I'm a big believer in like the Jeff Bezos notion of, hey, when you're stressed, that's probably accurate. Like, you probably should be stressed. Something's probably up. So you should, the way you act on that is you execute, you go, you build, you ship, you do things, you act. And so, yeah, no, you're right. It's a total roller coaster, and you just full send the roller coaster.
So you just ride the thing, just full on, hands in the air, ride it. But then you kind of take control in the troughs. You kind of recognize that you're feeling anxious for some reason. There's something wrong, and you take control. And then in the more kind of like peaks, you're able to kind of like not let your foot off the gas, but not have to be like stressed out to the max, kind of be more practical, less like day-to-day, like action oriented.
I mean, to be honest, I'm not very good at peaks. Like even when things go well, it's just not, the way I see it is like, I think a lot of happiness in life comes by removing the delta between what you are capable of doing and what your lived reality is at the present. And I think minimizing that delta creates a lot of happiness. And so this could be for work, right? Like, what do we know the company is capable of doing versus where we are today? It could be in how a team executes. It could be how you have an interaction with someone like at your local coffee shop. Like, are you treating them the way that you can treat people? Yeah. It has the same with relationships. Like, are you dating someone? Are you with someone and they're like the best person you can be with? Like, I think happiness comes by minimizing that delta. And so the reason I say that is when it comes to peaks, that delta is still massive for us. Like, we know what it looks like. I have a vision for what it looks like to be the payments layer for money going into blockchains. That's massive. Like, that world is going to grow by 1,000x, and our product can get 100x better to serve that. And so I haven't really felt the like peaks yet. I'll let you know, like when we're crushing it. I'm psyched for those peaks. Yeah. But yeah, no, it's just like focus, execute, ship, do, act.
Beautiful. All right, kind of shifting back towards the fun business as we kind of come to a close here. One of the things we didn't talk about was the rise of the agentic side of the payment economy and the agentic economy. I actually just saw today, there was a company called Liquid. They put out this like trading UI that allows you to like trade from an LLM directly, and it trades on Hyperliquid for you. We're going to see more of this, like, hey, take money from my bank and put it into Kraken and go on Polymarket, like literally like deposit money from my Wells Fargo into Polymarket and bet on the Knicks to win the finals. Like, do it now, go, right? Like, how does the agentic economy change the vision or the kind of broader TAM for what you guys are doing, right? Like, this is going to scale. There's going to be a lot of micro payments, a lot of like people just like trying these things to start. And then I think it's really going to snowball. Like, are you guys prepared for the agentic economy? What does that even mean? Like, what does that look like?
Yeah, it's a good question. So I guess I'll separate this into two parts. One, I'll directly answer the question, like, how are we thinking about it? But then I think what's almost more important is kind of the meta answer to the question. How do we approach answering this question? So in terms of what we do today, like a lot of our flows, we're very good at abstracting essentially like actions and complexities. So we're very good at saying, here's an action on a blockchain, and how do you originate that action from a bank account over here? And so it's a very natural product to plug into agentic workflows, right? It's a very natural API to do so. With that being said, we're not going on podcasts and ripping about our agentic workflows. It's kind of the same concept with commerce. We're not speculators. That's just not how we run our business. We are the type of company that has a customer in mind, and we will sit down with that customer and we try to really empathize and understand what they're trying to solve for, craft a solution with them, and then go from there. And so we haven't yet seen at scale applications using agentic workflows that have real kind of users at the other end where there isn't any kind of like token incentive stuff. And so we are kind of at the front lines waiting for that to happen, and we want to serve those teams. But the way we're going to craft the solution is in partnership with a partner, as opposed to us kind of sitting around and thinking about what it should be.
And then kind of the meta answer here of like, what's happening. Could you speak to a bit of kind of what you're seeing from your founder friends, from your investors, from customers? Like, what is the level of demand for this agentic payments? What are the blockers right now? What's working? Like, give us a bit of a lay of the land, stable coins, agents, what's actually happening?
Yeah, I mean, to be honest, we haven't seen a ton from customers or clients on like, hey, how do we implement agentic workflows into our current experience? Like, it's just not something that has come up a ton. So it's something we're monitoring, but we haven't seen a ton of data on it so far.
So are you a personal believer of this kind of like on-chain agentic economy, X402, like this whole like matrimony, holy matrimony between stablecoins and blockchains and AI for kind of this ideal future of the internet was built with a fatal flaw. It didn't have a monetary system attached. Now we have it. Are you a believer in this?
For sure. I mean, AI is going to be massive. It is already massive. It is obvious that there is no way for an AI to move money that is not blockchains. Like it's 100% going to be on blockchains. Like that is going to be the backbone. So I think that's absolutely where the future is going.
Got it. Alex, last thing from me is what's next? What are you guys primarily focused on? We're, what is it, May 26th today? We're almost halfway through the year, which is bonkers. What's the second half of the year look like? What are the main priorities? What are your KPIs?
I mean, it's all about people. Everything we're focused on, I'm calling it like internally the FinTech 50, and we're about 30 something now. I want, if you think about the intersection of three things, you think about the intersection of being very product focused, want to build something for consumers. You like to solve very hard technical problems, right? And then you have a deep passion for capital markets. Like you are a believer that capitalism creates a lot of good. You take stablecoins, US dollars, US economy, US markets, Western markets, you bring those around the world, that creates a lot of good. I believe that creates a tremendous amount of good. If you're kind of at that intersection, there aren't that many really super sexy places to go where you are really at that cutting edge and pushing all three of those really far. And so if we think about the next half of the year, it's really, for the people who are at that intersection, it is forming, it's finding like the top 50 people in that world and building the best team.
Beautiful. Ladies and gentlemen, that has been Alex Fine on Stabled Up, episode number 34, live from the tokenization tower here, the Empire State Building. Alex, that was great, man. Thanks for coming on. And guys, we'll be right back with Omnia from Kinetiq talking liquid staking on Hyperliquid. Their token launches tomorrow. Hype's absolutely flying. And then we have Kaleo to give us a little bit of markets update as well. Don't go anywhere, guys. Thanks, Alex.
Appreciate it.
Money, power, and money, power, and
We get deep, deep, you know we get deep. Deep, you know we get deeper. We get deep, deep, you know we get deep. We get deep, we get deep, we get deeper. You know we get deep.
Attend the Davos of Web3.
See you next year!
2nd and 3rd of June at the Louvre Palace in Paris.
just had a pretty crazy conversation with Alex from Fun. They raised 70 million, and guy's 26, dropped out of college like me. He's pretty funny guy. So that was interesting for sure.
That must be incredibly validating for you in your college dropout story.
Not really looking for validation anymore. Just looking for per to rip. We got Open Router announcing $113 million Series B, led by Capital JVC. Over the last 6 months, weekly volume of Open Router grew from 5 trillion to 25 trillion tokens. As AI rapidly shifts from experimentation into production, we're excited for what comes next. This company is ripping. And Venice is like the easy comparable to this one. So Venice is doing like 70 billion tokens a week. These guys are doing 5 trillion and then 25 trillion. So that puts it at like 20x, 100x, 500x or so on what Venice is doing, Open Router. And they raised $113 million on a Series B. So you're probably thinking maybe like a, I don't know, $1 to $2 billion valuation. I'm not sure if the valuation is leaked. So yeah, pretty awesome that the AI CapEx just continues to accelerate and our coins are not getting any benefit from it.
So I think an Open Router doesn't have a liquid token out there.
Actually, I don't know. I swear I've heard of them before.
Open Router?
But nah, I think they're just like a normal company.
A normal company.
Yeah, it's like a normal company.
I think so as well.
Yeah, they are.
Yeah.
Series B funding, $113 million, 25 trillion tokens per week. Pretty epic.
25 trillion tokens per week. And how many tokens per week did you say Venice is doing?
About 80 billion.
80 billion per week.
Yeah.
Got it.
So they got, I mean, let's call it, they're at 100 soon-ish. Then they've got what, a 250x to get to $25 trillion a week.
Yeah. I'm
So
counting 25 trillion divided by 0.08, about a 312 and a half X.
Yeah. So they got a ways to go, but I mean, that's the comparable, right? Like that's the TradFi or, Trad AI comparable.
Do we know the valuation of this company, or we just know that
don't.
we just know that they raised 113 million, but we don't know what valuation?
More than doubles valuation, 1.3 billion. Yeah.
It's only a $1.3 billion valuation?
That's right. Venice has had 2 bill or 1.75.
And they're doing 1/300th the amount of tokens?
Dude, it's the Eric Voorhees premium.
I mean, if we're just looking at a pure, obviously, so the amount of tokens that you're doing gives you a sense of the market share.
Dude, this is private, uncensorable ChatGPT versus
I like that distinction.
Menlo Ventures A16Z backed Open Router data farm.
I like that distinction because not all tokens are created equal. Confidential private tokens, one could argue, are more valuable than data farm, leech your data off of you tokens.
It's got the token premium. It's got
the privacy premium, I believe.
2 Knicks courtside NBA Finals tickets sell for $279,000 on StubHub. Ladies and gentlemen, the wealth gap is growing. Stick to the roll-up. We will help you make it. I think we've got Omnia from our lovely friends at Kinetiq joining shortly. Omnia is the co-founder of Kinetiq, also friends from different previous iterations of the space. And yeah, I mean, Kinetiq is doing a token launch tomorrow, I believe. They hold 76% of hyperliquid LSTs with 1.1K hype billion dollars of TVL. And yeah, they just announced their listing tomorrow on Kraken, if I'm not mistaken. So Kinetiq will be listed on Kraken tomorrow, KNTQ. And they're the 4th largest LST globally. Actually, sorry, the TG is already live. And let's see where they're at, Rob. I haven't actually checked them out.
Yeah, I'm looking at a market cap, fully diluted, about 200 million.
Yeah.
Good amount of, yeah. There we go.
$1 billion TVL.
There we go.
Hyperliquid's ripping. These guys are kind of like a really nice I don't know. You could say they're a nice like beta play to Hyperliquid. I mean, the chart looks pretty good. Guys are building strong. Tons of TVL. All-time highs. I think we're what 26 cents. So we're not far off.
Well,
let's get Omnia up
why
here.
don't we bring him up and we learn a little bit more about it. See,
Yo,
there he is.
Omnia,
Hello,
what's
guys.
up, man?
What's going on?
How are you?
All good.
You're
How
like
about yourselves?
the Naruto space kinetic creature here.
Yeah, we remixed the color a little bit. I enjoyed
Pretty
this
based.
one. Yeah. Good to be on,
It's-
guys. Thanks for the time.
It's good to hear from you, man. It's been a
Absolutely.
while.
Yeah,
It's
yeah.
been like different iterations. I'm glad you found a strong home at Kinetiq. You guys are doing great work. I mean, we'll get into it, man. But like, the hell's going on with Hyperliquid, man? What a run! ETFs, everything, man. How's it been from your side? It's been hectic.
It's been very interesting. Obviously, Hyperliquid's a great place to be. We've been using the platform for a few years now, and a little bit over a year and a half ago, started thinking about how we can actually go way, way deeper. Before HyperEVM went live, and shortly after they announced what is now the new consensus mechanism in production called HyperBFT, et cetera, et cetera. We thought at the end of summer 2024 there was a good opportunity to do something really interesting for the ecosystem far before a token was even confirmed or announced, and here we are. Now we make up 83% of the liquid staking market on Hyperliquid, 2% of the global liquid staking market, and we're less than a year old with an asset that's way younger than ETH and Sol. So yeah, it's a great place to be, for sure.
Beautiful. Omnia, could you give us a sense of the liquid staking market on Hyperliquid? Obviously, I think our audience is quite familiar with what liquid staking looks like on Ethereum. Obviously, economic proof of stake protocol. We have ETH locked in validators, and then we want to make that liquid and composable with the rest of the DeFi ecosystem. So, we issue a receipt token that is a liquid staking token that's free to be used, transferred, restaked, all kinds of things. What are the similarities with the Hyperliquid ecosystem? Can you just walk us through, the purpose of staking Hype and what the current liquid staking ecosystem looks like on Hyperliquid?
Yeah. So I'm going to take it a step back and actually talk about how hard Hyperliquid is fighting gravity here. So for those that aren't aware, Hyperliquid is its own custom L1 effectively, and really not meant for any sort of general purpose DeFi activity, at least Hypercore, the actual performance engine where all the trading takes place. So HyperEVM was built to effectively accommodate such activity, so that Hyperliquid could have DeFi, and people could do things like what we do with liquid staking, or we do with anything that we've done today, right? So we have several liquid staking products, but you see other things like options protocols, AMMs, money markets, etc. And I've talked about this for quite some time, but I do believe that what Hyperliquid's accomplished has ultimately been the holy grail in terms of what centralized exchanges could just never do. And to give some color as to what I'm talking about, you see every large centralized exchange usually go for having their own corresponding L2. These L2s, usually the worst of these situations, end up having their own tokens as well, and or other ecosystems, and really just become fragmented from the centralized exchange component because of jurisdictional complications. So Hyperliquid has been able to kind of unify this under one umbrella, which again, like I said, fighting gravity. So going back to the trading component.
Can I ask you a quick question there?
Yeah.
When you talk about the centralized exchange L2 bifurcation, you're talking about the likes of Coinbase and Base, Kraken and Inc, Binance and Binance Smart Chain, these sorts of things. Can you just describe what is the issue with that, and how does Hyperliquid help overcome those issues?
Yeah, I mean, there's a general issue from a jurisdictional perspective, right? It's the exchanges will try to introduce DeFi to their users on the centralized exchange via those L2s, right? In effort to kind of unify the entire experience, but it's really difficult to do, right? You're introducing this kind of non-KYC DeFi environment with protocols that can deploy permissionlessly and have to kind of beg the exchange for support or incentives and whatnot to a KYC and AML user base. It's just pretty messy, right? Is the idea. And you have this, again, these jurisdictional concerns where a separate operating team needs to manage this, and it's very odd, right? And this is what's happened for years now, right? Like you said, with Binance Smart Chain, and almost every other centralized exchange has opted to launch their own chain or L2 of some kind, whether successful or not. from T2s to even T3 exchanges, right? So, yeah, it's not an abnormal thing. And when I saw Hyperliquid doing this in early 2024, I was like, okay, like this is, if accomplished, this is going to do things that are, really not possible today, where you can unify the entire experience. So to give an example of what Kinetiq has been able to redefine and make possible on Hyperliquid is, Hyperliquid you could look at as two separate environments that live kind of within the same state, if you will. And Hypercore overall doesn't support, like I said, DeFi activity in any way, shape, or form. This is just where the trading occurs. It also houses kind of the staking module, where if you have Hype tokens, you can stake them natively and earn yield. But again, you run into the same problem, like you were mentioning, Robbie, where you have these tokens that are locked up effectively. And again, the liquid staking solution is just absolutely necessary, especially when you have a corresponding DeFi ecosystem. But what Kinetiq does differently to every other protocol is it effectively makes fully on-chain liquid staking composable with Hypercore through one unified smart contract where all of the stake is basically housed. And 100% of the stake at Kinetiq is staked at all times. So it is basically staked to the native chain itself. You could think of it as the same way as like Lido does with Ethereum, and then issues this receipt token on HyperVM where people can go and take K-Hype, which is our LST, and go do whatever they want. They can put it onto money markets and borrow against it. They can go trade yield on it on Pendle. They can go LP it on several DEX AMMs. So that's the idea. I mean, another really interesting development too has been being able to use it as collateral to buy and sell options with on HyperVM protocols. So yeah, the reality is, we make up the entirety essentially of the liquid staking market, even post TGE, post incentives, which has been really interesting to see. And overall, we've now sprung out into even more products outside of just the general purpose LST. For me, like plain Jane liquid staking business is extremely boring, to be completely honest. And that's been the case for the entire team, right? Like just liquid staking really sucks, but just doing liquid staking on Hyperliquid of all places would be like a huge waste. So we've expanded to several things. We have the Earn Vault that at one point was one of the largest vaults, if not the largest in DeFi. We run this with Veda Labs. Kinetiq is not even a vault product, but our vault is the largest on HyperVM by, a huge magnitude. So we have about $50 million deposited there of the nearly 1.2 billion in Kinetiq. That's managed by Veda. You get the best risk-adjusted yield depositing your Hype there. We have an institutional offerings where several public companies stake with us. So that's like Hyperion DeFi in the US, HYOQ Strategy in Canada, several regulated market makers. You can effectively deploy a custom and fully compliant LST with us through the same architecture. And then finally, we've launched KM Hype as well, which powers the HIP3 DEX that Kinetiq Markets operate. So,
I'm sure, Andy and myself, we both want to get into how Hyperliquid is building this comprehensive financial ecosystem, how you can serve some of these digital asset treasury companies and ETF issuers by, supplementing what they can do with their Hype. But first, I have just a more basic question, more about staking. We kind of talked about how everyone's accustomed to Ethereum staking. Given the proof of stake protocol, you can stake your ETH. It economically secures the network. Essentially, if you stake and you run validator with 32 ETH, you're putting your ETH at risk of being slashed if you mismanage your validator. But you are earning staking rewards while doing that. What is the purpose of staking Hype in Hyperliquid?
It's a good question. I think it's going to evolve over time. But today, slashing isn't particularly live in any way, shape, or form. Remember, the Hyperliquid network is especially young, especially in the form of decentralization. There's only 24 active validators in the set today that are going to be expanded now to 27. So the reality is the functionality isn't massive, and I think the staking yield reflects this. It only pays about 2.2% a year in Hype, which is extremely minimal inflation. And even if they, tripled that, the assistance fund buyback rate would offset that in a very short period of time. So it's a unique ecosystem for sure, but today there's not a massive amount of utility in staking outside of just ensuring that you're not diluted by 2.2% a year and then getting the access to several DeFi protocols through our liquid staking offering. So yeah, slashing will go live at some point, but there are no details on that today outside of slashing for HIP3 deployers, which again, there's no real concrete details around anyway, but that is much more serious because there are traders that can basically go and trade on one of 6 or 7 DEXs that exist today. And if there's any sort of malicious activity or just pure incompetence that leads to users getting wrecked for whatever reason, then a slashing event of the 500,000 hype could occur. So that is more explicit right now than just like plain staking, but I expect that to change over time as the network grows and decentralizes and eventually becomes, who knows, maybe even open source. I don't particularly have a thought as to when that happens, but following the path of maybe other networks here, it is a possibility.
Yeah. Man, I'm especially interested in, obviously 2.2% yield isn't crazy, but you guys still have done a pretty decent job of making money, and you guys have been doing some token buybacks. Like, give us the Kinetiq token thesis. Like, what is the, not financial advice here?
Yeah.
We're big hype holders, bulls. We've been, holding for so long, and just honestly just been like wanting to see this thing win. Don't hold any Kinetiq right now. We have people watching the audience who probably are, kind of wondering the same, like why, chart wise looks pretty good. Token looks good. Numbers look good. But like, what is the KNTQ thesis for hyperliquid bulls? Why kind of look into this?
It's a good question. So the most interesting part about KNTQ was like being the antithesis to what liquid staking tokens have traditionally been. And the consensus across CT and I guess in general, anyone who's touched a liquid staking token before is that they're generally horrible tokens to own. And I realized, okay, it's the same thing, as the liquid staking business by itself, right? Like usually you have this staking component, the token TGEs, and there's not really any reason to kind of be a part of the protocol or the story in any way, shape, or form after. It's just stake, you get extra yield, and like that's kind of it. And again, going back to the kind of purpose around what we've built far beyond liquid staking, we're super bored by just pure liquid staking. Liquid staking as a means to an end is, again, extremely uninspiring. But liquid staking as a means to become a very, very profitable and scalable business built on top of Hyperliquid's rails, now that is very exciting, right? So what we've done and ultimately have been able to loop in every single point of value accrual that Kinetiq does generate today into KNTQ has allowed us to build things like the HIP3 DEX, for example, using our staking offering as well. So we've brought in 700,000 hype roughly for this, which equates to what, 30 or 40 plus $million that now powers the exchange. These guys get a guaranteed share of the exchange revenue, and then a guaranteed share of the exchange revenue programmatically buys the KNTQ token and programmatically buys hype for the stakers. So again, this is a first of its kind, not only liquid staking, but on Hyperliquid. On that point as well, we have several front ends that we operate. So we operate a mobile app that just went live. Thankfully, it went viral a couple weeks ago with a little bit over 10 million views. That was a really fun video. And, again, signed up, several thousand users, and every single trade that's made on that application, again, is powering KNTQ yield on a real-time programmatic basis. So we've extended so far beyond pure liquid staking. But now to touch on that part, which by itself is interesting and the primary breadwinner still for the business today, we generate, a 10% rake from that 2.2% that's emitted on an annual basis, and 70% of that is programmatically generating buybacks via Hypercore directly in the order books that anybody could track in real time of the KNTQ token, and 30% is retained by Kinetiq for operations. And this already alone puts us in a very, very different league of liquid staking tokens, because the only other buyback program that another liquid staking token has is like very contingent on specific KPIs that the business needs to go through. Whereas us, it doesn't matter. We could have $1,000 in TVL or 10 billion in TVL, and 70% of our cut is going into the token. So we took the inspiration from Hyperliquid and having very, very explicit rules for how value is distributed and how the KNTQ token must play a central role in the Kinetiq ecosystem, regardless of our product suite. So everything from staking to the trading and front-end operation is accruing value to KNTQ directly. And there's no kind of meddling between Kinetiq as a token and all markets. The front end should have its own, no, it's all one unified system that's operated by Kinetiq and, governed by KNTQ. So yeah, that is the primary point, I would say. So yeah, a lot of things I've obviously taken inspiration from Hype, but you could think of Kinetiq and markets as effectively the most scalable businesses within the Hyperliquid ecosystem using its rails explicitly is our view. And Kinetiq is the way to express that view. We ran a very, very straightforward and simple points program last year called K Points. This morning, we also announced the end of the second round of K Points later this year. So Yeah, we've been extremely explicit about not drawing things out longer than they need to be, which hasn't really been a common theme in the Hyperliquid ecosystem and has led to a lot of user frustration. So again, we've just effectively tried to push a new standard overall, as Hyperliquid did within the ecosystem tokens, within crypto, like general L1s and especially perp dexes. We believe we can do with liquid staking tokens and the HyperVM ecosystem that we operate within. So yeah, that's a very high level. I can literally spend the rest of the call going through this, but yeah.
We've only got a few minutes here, but what I'd love to dig into is a couple more of these concrete examples for how Kinetiq fits into your vision and how you see Hyperliquid evolving. You mentioned, right now, liquid staking powers this HIP-3 DEX. I'm curious, like, what are some of the more creative things that you have in mind for how you can grow this protocol? Given that we have HIP-4 coming, we're seeing more and more about it. We're just talking about the Oracle design choices earlier on the show. We see ETFs, we see treasury companies. All of these guys are buying hype, the asset, stockpiling it. They want to ultimately do more with their hype. Liquid staking helps them do that. In addition to this DEX that you have powering HIP-3 markets, how else do you foresee Kinetiq playing a role in the Hyperliquid ecosystem?
Yeah, it's a good question. I mean, obviously, there's really huge doubts out there, right? Hyperliquid strategies alone would double the TVL of the Kinetiq protocol today, all overall by themselves, on top of the ETFs that are coming. And thankfully, we're in conversation with every possible ETF to make sense out of them being able to actually generate a higher return for their ETF depositors.
Quick question: Are they're currently getting diluted at 2.2%, or are any of them currently staking their hype?
If they're not staking, then yes, they are. And what I can say is that ETF issuers are very, very excited to just beat the quote unquote benchmark of the just pure staking yield, right?
Really?
Oh, absolutely. I mean, 2.2% is really not enough to get out of bed, but you just want to make sure that you are staking so you're not getting diluted by 2.2% a year. But the buybacks on hype alone justify not necessarily needing to be in a rush to stake, right? To get some value from the protocol. It's not like Solana or Ethereum where the network is inflating by between 3 and 8% or more sometimes a year. So yeah, they are, there's no particular quote unquote rush, but the other side of it too is Kinetiq has taken a lot of steps to ensure that we are really the only option when it comes to staking outside of the native staking component, which can be complicated. So for example, before custodians supported hypercore staking, Kinetiq was really the only opportunity and option for institutions to access any form of staked hype, because hypercore is such a bespoke network integration. There's no EVM framework to just go off of that you just simply pay a fee and get integrated with. I think another thing people don't realize too is that Hyperliquid does not pay for any integrations at all. It has to come from the direct and sole desire from that integrating team to integrate Hyperliquid, because they may be missing out on so much business if not. That has kind of thrown kinks in many processes in terms of infrastructure and tooling. So this is where Kinetiq initially operated, by filling a lot of gaps for sure, outside of just offering the overall liquid staking component. But the other side of this too is, as Hyperliquid furthers its own product suite from HIP-4 to expanding the builder code offering, expanding the validator set, etc., Kinetiq is the sole and primary, in my opinion, beneficiary from this. I'll give you an example. Never before in the history of liquid staking protocols have validators really economically bought into an active set of a liquid staking protocol. Today, the Kinetiq active set is made up of 13 validators who have committed to taking 50% of their commissions and purchasing the KNTQ token with that. Not in their possession, they send it to the KNTQ deployer, and they basically buy their way into the Kinetiq active set. This has never happened before. So the amount of alignment that Kinetiq has been able to create between the network, meaning its validators, and the protocol, meaning its depositors or token holders, is just never really seen before, right? So the Lindy effect is growing, of course. The trust and I guess you could say also the reputation of the protocol is growing. It really makes Kinetiq the only option for institutions who are looking to kind of take their Hyperliquid exposure to the next level. Yeah, not to mention, how liquid funds look at Hyperliquid as well, which is also very interesting. But yeah, the point being that that's how we've looked at it and that's how we've positioned Kinetiq, and do believe that there is going to be significant amounts of institutions who are like, okay, we are now comfortable with this network over X amount of time. Let's do more, right? Let's go and get, yield on selling options on our hype, or let's go and provide liquidity for arbitrageurs, et cetera, right? So this is what we've seen play out. This is the interest that we've seen happen and kind of like manifest in the recent months. But yeah, as usual, these things usually hockey stick. So I expect a lot more pretty soon.
Yeah.
But yeah.
Where do you think hype goes from here next, like throughout the rest of the year?
Interesting. Yeah. I think it's really funny. If hype does nothing from here and just stays at this price while other assets melt, I think that already is like a base case for me personally. But I believe if we have like a similar, just gonna change hats for a moment to like more of the trader side, I guess, and try to look at it from a different perspective. But if we really do run back the BNB or ETH fractal of a few years before, as people realize that Hyperliquid, by the way, this is a probably unpopular take, but Hyperliquid is extremely, extremely illiquid compared to the traditional kind of majors, right? And what I mean by this is, again, I'm going to go back to the point of Hyperliquid does not pay for any integrations. They don't pay market makers to make markets for their token on any exchange. The primary trading venue for hype today is Hyperliquid itself. And it is far more illiquid for its market capitalization and fully diluted valuation than something like a Sol, ETH, or even tokens that are worth less than it, right? That are significantly more liquid. So that contributes a lot to the volatility of hype. And therefore, it can do a lot of really interesting things in both directions, right? Like, it's very easy to move down in price, but it's also extremely easy to move to several $100s, in my opinion, as well. So, yeah, do I have a particularly concrete target as to what happens this year? Let's just say
up or down.
Yeah. I think we've seen all the down action for the rest of the year, at least personally, unless something absolutely ridiculous happens, 10-10 style. But I do believe that as more and more institutions kind of like get ridiculously interested in Hyperliquid, we probably see anywhere between 100 and $200 by the end of Q3. And if we get some really ridiculous action, then it probably goes even higher than that. I mean, Filecoin went to like 500 billion fully diluted in 2021 or something. So yeah, that was.
I remember, man. We're the only show that's bullish still.
Really,
the only bullish show still.
Actually?
I think
I don't. Yeah, like I don't think it's popular to not be bullish on Hyperliquid, but it's also kind of popular to shit on Hyperliquid at the same time. It's weird.
Yeah, and Hyperliquid is a bit uncorrelated from the rest of the market these days. So when people are having their broad takes, it is a bit separate from their Hyperliquid thesis. I think you make a great point about the illiquid nature of Hyperliquid relative to coins or companies at a similar market cap, and how that adds reflexivity and volatility.
It's a very hard token to trade on perps in many ways because of this, because it is significantly affected by news, at least many of the times. I don't know, like the hit rate on trading this token is like very, I don't know if I could say low, but like it's riskier to kind of trade your hype position because you can be left behind very, very quickly. Or like, I don't know, maybe 2 out of 10 times you may get super lucky and be able to buy a lot more lower. So it's a tricky situation, but I think it's for the better. And like what I've been talking about since Hype DGE has been that it's always been better for Hyperliquid that the main trading venue is not Binance or Coinbase or wherever else, and they kind of prefer that as well, even if that means that it's harder for institutions to buy. Because those that can buy, I mean, there's friction to purchase hype, right? That's the good news. Yeah. It's not even listed on Binance Spot yet, right?
Yeah.
So, and it is also kind of funny just to throw this in there that Binance has to pay market makers to list hype on Spot because Hyperliquid's not going to pay them. So that's always been like a really funny thing to me.
Well, Omnia, congrats on the success of Kinetiq and the launch of Markets.xyz. Stoked to have you on. I really just wanted to catch up and get an understanding of what this asset is doing and what you guys are building, so I can get a better understanding of kind of portfolio allocations for ourselves and for our audience. So appreciate you, man, and keep up the good work. And hopefully you guys get Bitwise, 21 shares, and all the rest to get in there and liquid stake their hype, man.
Appreciate it, guys. Thanks for the time. Good to see you.
Cheers, man.
Congrats, man.
Thanks, guys.
Alrighty. Up next, we've got Kaleo, the co-founder of LedgArt. Frankly, just an absolute giggable. He remains bullish in this market. And boy, oh boy, he's wearing an OKC hat. Little does he know. Little does he know that the Knicks are coming in strong. We're going to have to start there because I don't know if this guy's ready for Jalen Brunson after a sweep. His Thunder are probably going to go to Game 6 at least.
He's got to get by Wembanyama first.
In fact, they're definitely going to Game 6 just by pure math.
That is.
So I mean, it could be Game 7. Knicks are going to get a lot of rest. I don't know if the Thunder are going to be ready for a rested Knicks team, especially if they go to 7. I was watching the playoffs with Kaleo last year. Let's bring him up here. Let's get the Giga Bull up on stage. Get him on the show. What's going on, man?
Thunder up, baby. Look at that.
Thunder up.
For you.
Oh, my goodness.
Wow, bringing out the big guns.
No,
Here we
that's
go.
the good luck hat, too. The good luck hat. We have not lost a game this playoffs when I've worn the hat. So I'm like, I'm not taking it off during game day anymore.
Okay.
We're sleeping in the hat. We're showering in the hat. The hat stays on.
The hat stays on. I mean, dude, people are saying that the East Coast has no chance against the West Coast, regardless who wins. But I don't know. Those Knicks are looking strong this year, man.
I posted something about that yesterday, and I kind of see it like Indy last year, where Indy was hot ending the season, and they were hot throughout the playoffs too. But everybody said, you know, myself included at that point in time, I was like, there's no way that Indy matches up well with OKC whenever playoffs, whenever the finals get there. And like, I think y'all are even hotter than Indy was at that point. And I honestly think you have a better starting 5. So,
Indy took him to 7 games last year, right?
Yeah. That's my whole point. It's like, I think the Knicks could surprise some people. I still think the West wins, whether it's OKC or the Spurs. But, you know, I think the Knicks are going to push it a lot further than people gave it credit for going into the playoffs. So, you know, I don't think it's a pushover.
Well, I was in the city. Well, I'm in the city now, and I was here last night for the game, and place was just, it was a zoo. It was a Monday night, like 10:30 p.m. It was a zoo on the streets.
I can imagine, man. I can only imagine. I know what it was like when I was up there when y'all were not good. So I can only imagine. Like, I say that because it was electric when y'all were not good. So I can only imagine what it's like right now.
Yeah, man. Well, hey, we've been harping on this kind of secular bull market happening. We had Arthur Hayes come on yesterday and drop the show, and you know he's all hype near Zcash. There's this Venice rally happening. There's this privacy AI rally. We're just kind of like, all right, look, there's these pockets of opportunity. There's these sectors in the market. Really, just praying for Bitcoin not to just have the bottom fall out, because then the party's going to end. Man, where are we at, Kaleo? It's been a hell of a 7 months, 8 months now. I mean, we're end of May, beginning of October kind of topped us out 10-10. It's been a journey, to say the least. And I think you kind of have different camps of people thinking that we go a little bit lower to the end of the year, and then that is kind of where our bottom is. I think you're more bullish. Just, broad strokes here, man. What are you seeing out there? We lose Kaleo. Yo.
Well, first and foremost, I apologize if I've got any crappy Wi-Fi.
No, you're good now.
Right now, I was messing with that connection. I'm moving tomorrow, so y'all are giving me a break in between the move, and nice. I have had issues with the connection here for a minute. But what I'm seeing in the market, dude, I think we're kind of like September 2020 is what I would like to say, where, you know, September 2020, you look back at it, the markets were ripping across the board, right? Like the S&P 500, QQQ were just absolutely printing. And in crypto, it was relatively boring unless you were in the right pocket. And the right pocket throughout that summer leading up to it was DeFi, right? You had the new innovation of DeFi where it really was, you know, there were a lot of earlier forms of it, but it just never really reached, it had its breakthrough moment at that point. And that's kind of what I look like right now with the market with crypto. It's, you've got these random pockets where you've had obviously everything with Hyperliquid that's been taking off, right? Like you've had the privacy narrative is one that I'm still just debating on, man. I've just seen it so many times that I want to be sold on it. I've wanted to be sold on it forever, but I feel like that's a different conversation. But one way or another, the privacy narrative, it's happening, right? And then the last one is the AI narrative, right? And if you are in those pockets right now, you're doing well. You're in a bull market, you're printing. And if you're not in those pockets, you're like, crypto is the worst asset possible. And it kind of is. And, outside of software, because it's basically like, look at the Bitcoin chart and then look at a bunch of these different software companies that are out there, like type in Adobe. And I feel like the price action for the past few weeks for Bitcoin is basically mirrored that. So that is what the market is treating it as right now. So I think it eventually turns around. But, like right now, that's where we are. I think we're kind of in that the boring, the calm before the storm.
So then what's your bear case? Like what would the most bearish outcome for the rest of this quarter into Q3 really look like for you?
Most bearish outcome is, equities do top, right? Like, I think right now we are in a bit of a bubble and nobody really knows how Warsh, for instance, is going to really, whether or not he's actually going to be Trump's puppet or, whether there are some other factors, whether it's an escalation with, I feel like with Trump, you never really know what the next black swan event could be, right? So if there's something that somehow does top out equities as a whole and Bitcoin's as weak as it is right now,
it's GG's then. Man.
Yeah. So, I mean, I feel like that's the main bear case that I have toward it. But outside of that, I think as long as equities remain strong right now, a lot of the narrative that has driven down different things, like you've seen a bunch of the different exploits across old, DeFi infrastructure within crypto recently. And we saw by far the highest number of attacks and the largest amount of capital that was taken over the course of the past several months. And I think at a certain point, though, that escalation, it goes up and up and up. But at a certain point, I think that it does the opposite. And even though we started, right here, and then went way up here, I think eventually at a certain point, AI infrastructure gets good enough that it actually does make things more secure. And it makes the use case for crypto being frictionless payments for AI infrastructure and for all those other, I think it does make the overall infrastructure of the crypto space as a whole better. But, you got to go through a little bit of the pain before you get to that point. And I think that's really what we've been in the process of doing. And well, understandably, nobody wants to park a huge sum of capital into a bunch of these different projects and a bunch of these different protocols whenever, whatever the next evolution of Mythos is, what effect it might have.
Yeah, there are some very, very real considerations. And I think people understand the power of AI, both positive and negative. And so right now it's better to be on the side of it rather than against it. We see where DeFi is, and it's mostly against AI, and there are assets that are performing quite well on the side of AI. Kaleo, you mentioned, still somewhat skeptical around the privacy narrative. Zcash gets kind of wrapped up in that, and then we've got AI. We're seeing some hot coins in terms of NEAR and VVV. And then you've got kind of this return to fundamentals, this Hyperliquid, and there's some other ones in there that do well. Given that you're skeptical on, the privacy side of things, where are you most concentrated right now? Is it equities? Is it, more on the AI side? How are you navigating, the current somewhat secular market structure?
I've been the most boring that I have ever been, is the honest response to that. I'm not really actively trading right now. So it makes it a lot easier to look at a bunch of these intraday moves and a bunch of this. And it actually is something that's encouraging to me from the building point of view. I love to see things flat right now because I want to spend as much time as I can positioning myself for what I feel like is the inevitable move higher. And I know you probably brought me on from the trading perspective, from the whatever. So I like to still keep up with it. I like to still look at the charts, but it's a lot easier to not get focused on. I think I saw somebody earlier, like Thread Guy posted something. I know that 15-minute candle with Bitcoin. So many people this morning. And it's just, I don't really see things that way anymore. It was like a 1% move, like each direction. And it's just one of those things where what does that really matter in the short term? So, I think that's been the biggest shift for me, is rather than just focusing on the volatility that crypto brings, it's focusing on the potential that it can bring down the road. So, I have not done, I'm embarrassed to say it, I haven't done nearly as good of a job as I should have allocating myself to the different trending sections, right? I've been a little bit more boring where, it's been a lot of just Bitcoin and unfortunately some ETH. And then some other assets that it hasn't done what I want it to do yet. But, I'm punting on some narratives that I think could take off, right? Some other hyper performant L1s. I think investing some in those ecos and parking a little bit of capital. And if they ever take off, those are the type of things where right now nobody wants to touch. Right? Yeah. Looking for the areas of the market that nobody wants to touch and then really saying, okay, like at what point, because again, most things in crypto go like this until they go like that. And at the point where they start that ramp up, it's really difficult to catch up to the narrative.
Yeah, and we've had this conversation before where it's effectively like all the gains are made in 15 days throughout the entire year. You just don't know which 15 days. So you kind of have to be in position for whenever that may happen and capture that upside, because it's difficult to jump in after that move. And so, given that you've kind of placed some chips, but mostly staying patient, what is it that you're keeping an eye out there for? Obviously not 15-minute candles breaking, technical analysis formations. Is there, and you mentioned Kevin Warsh kind of feeling out, will he be Trump's puppet? I think the next Fed meeting is in about 3 weeks. So we do have some time before we really get an indication of his hawkishness or dovishness. What are you looking out for? And what kind of signals are you looking for to tell you, okay, this is confirming the thesis, we are going to go higher, or, maybe, Warsh isn't going to cut rates anytime soon, we're going to go lower?
I still think Bitcoin breaking 100K is a huge one. I'll probably be willing to be more risk on, and we'll focus a little bit more attention actively trading and looking for some of those trending. But I don't really think easy mode hits the market until that happens. Bitcoin is still king at the end of the day. And I not discounting any of the other narratives. I think the other narratives are incredibly bullish, and they have had an insane bull market by themselves. And I wish that I was along for that ride. And honestly, there probably is quite a bit of momentum that does continue to follow that. But as far as the broader crypto market is concerned, I think it's important for Bitcoin to reclaim 100K, start closing back in on all-time highs. And if you look historically, a lot of the time, whenever alts start to take off, it's whenever Bitcoin starts to gain, like 2021, for instance, alts didn't really take off until Bitcoin got just up to that point. And it was, January of 2021, and Bitcoin had just broken all-time highs, December 2020, if I'm remembering correctly. I should pull up the chart, right? And, you could say the same thing even back to the previous cycle. When you're talking about like in 2017, where Bitcoin started to break out, is where a bunch of the different alts, the ETH ecosystem started to rip, and the ICO narrative started to rip. So I look at it again with this cycle, and I'm like, man, whenever Bitcoin makes that clean break again, whenever it starts approaching it, is if you're really looking at from a trading perspective and where you have to stay locked in 24/7 to every single thing that's shifting and things speed up, it's whenever Bitcoin starts to really approach the previous all-time highs. So what is going to drive that? I haven't really been focusing on as much, and I'm not going to like sit there and BS and say I know exactly what it is, right? I wish I did. If I did know exactly what it is, then I would still be trading with high leverage and pushing all the chips on the table at the right time. But I think right now it's just important. It's like positioning yourself. And, you know, for me right now, a lot of that time is just spent really building and, you know, learning how to grow skills where it's not just about creating content and sharing a narrative and betting on the narrative, but it's like, how can I be a part of building something around that narrative, you know, whenever it does happen? And yeah, so.
Yeah. Have you been doing any of the AI trade at all on the equity side? Like, have you been doing any of those memory stocks or semiconductors or any of that?
Those are the type of trades that I would have made like $100 million off that
yeah, because you're like the type of guy.
2021, man.
You'll buy some ridiculous calls or something.
I would have. And, you know, I hate to come on here and just be this boring person.
No, I respect it. Capital preservation.
Because, you know, like a huge thing that just clicked for me along the way, post FTX and post all that drama, right? Like, I made a lot of money really quickly and I lost a lot of money really quickly. And I did that several times around, right? And I did it in both equities and with trading perps. And I, you know, in a trending market, I feel like I can, you know, I can push the table or the chips on the table faster than anybody, compound it faster than anybody. But again, with that, I think I realized a weakness of mine is I just don't have the discipline whenever I have that mindset to take the chips off the table at the right time. And I think that's an important lesson for a lot of the people listening on here. It's like, I obviously had a ton of success doing that, right? And, you know, it brought a lot of attention. And I still enjoy looking at the charts. But being able to take a step back from that and then just focus more on the broader ecosystem itself and not like, you know, a shift back to the fundamentals rather than like, dude, get away from leverage is the biggest thing. It clears your head. It does. It clears your head. You'll have time to be able to focus on everything else. And, you know, that's kind of where I am right now. It's just realizing that, you know, trying to make money slowly is more fun than trying to make it fast. And maybe that's my boomer side coming out of me, you know.
Well, it's also more difficult.
It is. It is. So, yeah, you know, I wish I could come on here and tell you the perfect answer for how to do it, right? Like, it's one of the things I'm trying to figure out right now. I am spending, it feels like 12 hours a day right now just trying to, you know, a lot of it started as just AI, right? Where I didn't know how to code at all. And it was AI pushing stuff. But then it was parsing through the lines of code and like reading and learning the structure behind it, and then learning structure of like full stack infrastructure and going through that process, then comparing a bunch of the actual, you know, the actual tech of a bunch of the different chains and saying, how do different things work well with the different architecture of different chains? And then, you know, like, it has given me new life as far as the way that I view crypto in general and the way that I view the market. It gives patience because I'm still very confident that the market eventually is going to have that moment where it is up only and you're not going to be able to step away from the screen.
What gives you that confidence? Is it, you know, the thesis, the vision has not changed. You know, obviously Federal Reserve, this money is still printed out of thin air. That train is not slowing down. Politicians, the only tool that they have at their disposal is printing money to solve their problems. Bitcoin there's only 21 million, you know, smart contracts, decentralization. It's you know, fundamentally this industry is still on a path to success. Or is there something else in the water that says to you, hey, you know, we're on the right track. Ultimately, this thing is inevitable?
Frictionless finance. I think that money flows to where there's less friction, right? Like it eventually has gravity. And when you look at crypto in general, it is about, like the essence of everything, whether it truly is decentralized for some of these different L1s that are taking off. I mean, it's frictionless finance. Money flows to the easiest path. And when you look at crypto and the infrastructure in general, I think it's inevitable that whether or not it's going to be the degenerate side of things that we see or not, like it's going to continue to work itself more synergistically with traditional systems. And it's also a really, really easy and intuitive layer for the average person as a bunch of these different users, like talking about fun, for instance, and the innovations that they're doing, making payments and onboarding and off-ramping or on-ramping, off-ramping a lot easier. There's a lot of that. Even the NFT side of things. I look at digital collectibles, and it's a frictionless form of collecting. And I do think that there is something that's going to rotate back toward that, the same way that you could talk about how different trading cards and whatever, well, I could easily print off something that looks basically the same as that. What does a sheet of paper really do for you? I think the digital collectibles are another thing that, as these different ecosystems and assets continue to gain provenance and continue to gain momentum, naturally, some of the higher beta plays, like the assets on those chains, are going to be the beneficiaries. So,
yeah. I mean, Kaleo, just to close you out here, man, I know you got a big move. Are you thinking Spurs in 6 or Spurs in 7, or what do you?
Oh, dude, it depends on do we get either J-Dub or AJ back healthy? I'd rather have AJ. Okay. Neither of them, it might be 6 or 7 Spurs. If we get one of them, if we get AJ back, well, AJ's out tonight, so I don't know. J-Dub's still, like, it sounds bad. He just doesn't have the chemistry, but if a coin flip, I'm going OKC I'm still going OKC 7.
Yeah, beautiful. I think it goes to 7, regardless of who wins.
So
I don't know who wins in 7, but I think it goes 7.
Yeah.
Well, Kaleo, it sounds like you're in capital preservation mode and building mode, which I think is the right way to be thinking about things right now. It's been this is your 3rd cycle. So, that's a very third cycle thing. You know what I mean? Like first cycle, you lose 90%. Second cycle, you lose 70%. And then third cycle, you end up doing pretty well. So.
Yeah, so, hey, it's boring for now, but naturally, if you're just along for the ride, the market won't let it stay boring for long. So,
yeah. Well, if we do get a OKC Knicks finals, I will be expecting you in New York, man, for at least one of the games. Because I know it's going to be epic.
All right. Well, I appreciate y'all having me on.
Thanks for coming,
best
brother.
Best of luck in the move, man.
Appreciate
Hope everything
it.
goes well.
We'll see you next time.
All right, Kelly.
All right, later.
Cheers, buddy. The capital preservation mode, Rob.
So that's 3rd cycle vibes. What's 4th cycle?
Dude, 4th cycle is post economics.
That's like think about the crowd of people who are in their 4th cycle, right? It's like Jeebus, Kobe.
Yeah.
A lot of those guys are a lot less active.
Yeah, for sure. It's definitely post economic vibes. Totally Vitalik energy. But we'll see. Each cycle kind of delivers, I don't know, slightly less and less, it seems, but still a lot of opportunity. So, yeah. Rob, that's been the show today.
It's been fun.
Great show.
Feels good to be back. Big
week. Big Memorial Day weekend. We're back. We'll see you guys live tomorrow at 12:30 p.m. Eastern. Another great show, Rob. Enjoy. Stay safe out there. No leverage, all right? No leverage.